This video is going to be most important, so listen it carefully and watch it dedicatedly. Before initiate, I would like to say one thing. Please subscribe and do comment so that it will reach to the maximum student and help them. So let's move to the function of financial market. One thing I would like to say that at least 20 marks 20 or 22 marks will be come from here, so please watch it dedicatedly. Okay, I will say how the question will be framed and what kind of questions do come. So listen, functions of financial market. uh, so it's the question will come like this, which is not a function of financial market, and three options will be correct and one will be incorrect. So the options will be put savings into more productive use and determine the price of the security. Remember price. Okay, the question will trick options give you quantity, determine the quantity of the security. So that will be incorrect. Second, price discovery. Third will be make financial liquid or lower the cost of transactions. They will trick you like higher the cost of transactions, so that will be incorrect. Second, according to Levin, the five key functions financial system in a country. The same thing, just like ever, they will ask which is not a function. So remember these keywords like capital allocations. It is a function, monitoring investments and management of risk, and mobilization and pooling of savings, and promoting the exchange of goods and service. So these are functions of financial system in a country according to Levy. The third will be questions will be framed like FIMMDA was incorporated under which section of the Companies Act. So there will be options like Companies Act 2013 and Companies Act 1956. So the correct answer is 1956 and section 25. And fourth will be come like who issue CD, certificate of deposits. So remember, it's scheduled commercial banks, excluding RRB, regional rural bank, and local area bank. So options will be given like RRB also. Okay. So options. The question will be like who does not issue CD or who issue CD. So if who does not issue CD and the option will be RRB, then tick RRB. The fifth will be on commercial papers, CP. So questions will be either who issue CP, you know already, corporates. And the second will be like a maturity period, minimum maturity or maximum maturity. So remember 7 days to 1 years. The options will be like 15 days to 1 year, 7 days to 1 year, 7 days to 6 months. The options will be like this. So the correct answer is 7 days to 1 year. The sixth question will be framed like uh, the requirement is for like options will be net and tangible assets at least 3 crores, and here they will trick like the correct answer is not more than 50% in the monetary assets, okay, held in the monetary assets. The option will be 66.67 25. The option will be like this. So remember, at least 3 crores net tangible assets and not more than 50% held in the monetary assets. The seventh will be book building route. So remember, at least 75% of the net offer to the public to be mandatorily allocated to QIP. The eight will be SPACs. Okay, It's also known as blank check companies. And the question will be like who supported, who finance SPACs. So remember, well-known CEO or celebrities finance or supported, primarily supported to SPACs. The ninth will be on the anchor investors. Okay. So remember, the question will be like investors shall bring in additional amount, but if the price arrived at the at after the book building process is lower than the price at which shares were allocated to the anchor investor, the excess amount shall not be refunded. Okay, not be refunded. And if higher than the price at which shares were allocated, bring additional amount. So remember this: bring additional amount, and excess amount shall not be refunded. So 10 will be like on the basket trading. So basket trading is like acquisitions, selling or acquisitions of 15 or more securities. Okay, 15 and or more securities, and it is used usually by stocks. And remember, it's for a specific ratio. Remember these terms. Okay, the terms I highlight. Remember these: a specific ratio must use basket trading, and 15 or more securities. Okay. The 11th question will be like index closing price. Compute the closing price of the stocks. So which is based on the weighted average. Okay, weighted average price of all the trade executed during the last 30 minutes. Okay, of continuous trading. And 12 will be on the market capitalizations. These questions will come, practical question come like on the market capitalizations. They will calculate to market capitalization and free float market capitalization. So remember the total outstanding shares into current market price per shares. You multiply this, it comes market capitalization, and free float market capitalization, outstanding shares held by the public. Okay, held by the public into current market price of each shares. Then it will come free float market capitalization. And 13 will be they will ask settlement period, like T plus 1. So they will ask when it will complete. So remember, by 1:30 p.m. 14 they will come like they will give you like IPO comes, and since 2008, India's first institutional promoters and companies given like Reliance Power and Coal India, etc. So remember these name: Power Exchange India Limited, PXIL. Okay. The 15 questions will be on the repo rate. And repo rate is the rate RBI lends to commercial bank. Okay, RBI lends to commercial bank. RBI is the father of all bank. So when father lends the sons, it is repo, and when sons lend to fathers, it's reverse repo. Okay. So repo is RBI lends to commercial bank, and reverse repo is commercial bank lends to RBI. 17 will be on the dirty price or clean price. So remember one ratio, like dirty price equal to clean price plus accrued interest. Okay. So if they will ask like clean price, so dirty price minus accrued interest, and dirty price then clean price plus accrued interest. 18 will be like a dirty price, options will be equal to clean price or lower to clean price, etc. So dirty price is always remains equal to or higher than the clean price. Okay, accrued interest may be 0 or maybe something 1 2 or anything. So dirty price is always equal to or higher than the clean price. 19th on the callable bonds. So question will be the options like to redeem the bonds before its maturity date. Redeem the bonds before its maturity date. So it's callable bond. 20 will be open interest. Okay, so the question will be different options will be there, and we will find similar options. Okay, the only difference is one words, like there is outstanding, there is extinguished, etc. So remember, outstanding for an underlying assets. Okay, 21 will be margin trading. So margin trading, there will be options like 40% of total value as margin, and borrowing for from say 50% from the bank, 40% from the bank. So remember, margin trading is 60% borrowings from the banks and 40% of the total value as margin. Okay, the next will be crowdfunding. So remember, huge number of small investors. Option will be like small numbers of huge investors and high value investors. So remember, huge number of small investors. Okay, it's a crowdfunding. The next will be management buyouts. Okay, so who fund to management buyouts? So remember, private equity firms. Okay, the option will be like different options. You will like it will be given like governments, etc. So remember, management buyouts are often funded to management by private equity firm. The next will be Series A funding, Series B funding. So remember, Series A is seed capital, like initial round of funding, and Series B is subsequent round of funding. Okay. The next will be IPO. So remember, IPO is this represents highly successful exit for private equity firm, whereas liquidation is the least. Okay, liquidation is the least preferred method, and IPO is highly successful exit strategy. The next will be commission for underwriting. So remember, don't do mistakes, like there is less. Okay, either 5% of total value or 25 lakhs, whichever is less. Okay, so practical will comes, like to calculate underwriting commissions, and there is a different answer, like in the value. So remember, 5% and or 25 lakhs, whichever is less. Okay, if the value is like in crores, so it obviously it will come like 25 lakh is the answer. The next will be SP and global rating. Okay, SP and global rating, the question will come like uh, what is the role of SP and global rating? So it's like an basically it's expression of opinion about the credit quality of a company. And another question will come like it's not only important for the corporate, but also for the government and financial sector also. And remember one thing, the company can meet its financial obligation in time or not, whether. So SPN global rating, like the credit rating is basically an expression of opinion about the credit quality of a company, that is whether the company can meet its financial obligation in time or not. The next will be like financial lease. Financial lease, you already know, is a long term arrangements. Okay, and the next question will be cross border factoring. So the question will be, how many parties involved in cross border factoring? Don't do the mistakes to tick on the two parties. Okay, there are four parties involved in cross border factoring transactions. Because cross border factoring is also known as like uh, two factor, like something like two factor. So don't do mistakes to tick on the two parties. There are four party involved in cross border. Either they will say four party, there are four party involved in factoring transaction. Which factoring is this, like cross border or domestic, etc. So the question will either four parties or cross border factoring, vice versa. Okay, if three party involved, it will call domestic factoring. Okay, next will come on buyback. So it practical question will come, that maximum limit for buyback. So remember 25% of PUSC plus FR, pre-reserve plus paid up share capital. Okay, and a special resolution needs if buyback is 10% or less than board resolution, and debt equity ratio is maintained to be 2:1, and it should be fully paid up. Next is mutual fund. They will ask SIP, full form, systematic investment plan. It is to regularly invest predetermined sums in your chosen mutual funds. And systematic transfer plan is when fixed amount of money you invest, like lump sum investment. Okay, so transfer, investment, and withdrawal. So when you invest lump sum amount, it is called systematic transfer plan. When you invest a fixed amount, uh, it is called SIP. And when you withdraw a fixed amount of money, it is called withdrawal at regular intervals. So it is called SWP, systematic withdrawal plan, to withdraw a fixed amount of money at regular interval. So this is very very important. Almost 25% or 20% question will be come from here. And I am thinking to make on the practical aspects also, because I got to know that practical questions are coming, like from challenging, like tough, from factoring, from leasing, etc. So I will make another video if need for practical. And I would like to request you to subscribe, and please comment, so that it will reach to the maximum students, and they can benefit from these lectures. Because I generally don't tell that to subscribe or comment, but I feel it's a very important sessions, and it is very very important. So watch it, and please, everything I said in this video and highlighted, please keep this as a like patthar ka lakeer, and all the best. Okay.